Well, hey folks, Scott Henderson, shooter. Of course, at the end of the presentation, review our disclosures. Unfortunately, if you weren't here, you missed the first 5 minutes because I forgot to hit the record button. All right, let's jump into the SPY. So this breadth that we have here, of course, our first target should be around 714. If it's a little extended around, which is this shelf, which, at this point, I don't see earnings are good. God, the average is coming in. We have 15.7% on earnings this season. Yeah, that's pretty solid. I mean, outside of the fact that I don't think anybody knows what they want to hold, there's so much rotation. But to be very frank, that could be the new norm with AI, which is something I'm struggling with because it's like grasping why have these dynamics changed internally? And the only assumption that I can come up with is that AI is managing so much of the book right now. I mean, even the 4 a.m. scans, which I was digging into yesterday, the 4 a.m. scans, they're literally shopping stop runs from retail now, to the extent they're mapping the open from that. And that's absolutely just insane. So they see where we put our stops, or the bulk of the stops are. So between the Asia Open and the US Open, they're running those stops. So literally what happens is if you have a stop, a large chunk of people get taken out, and then the remainder of the people take a little heat, but yet it'll recover in a short period of time. However, we're also seeing that where they're taking out the stops on longer duration, as far as strikes, and the premiums aren't recovering, which is one of the reasons I'm extremely light. So, but I think this is what holds that 697. I could be wrong. I've added what appears to be an elongated 3 impulse wave potentially. So I see equality, extended, elongated, and then all hell breaks loose. Because very candid, if we break below this shelf, there's no reason we don't go down to here. That's just where we're at. We're also really fast in this wave. If we look at our mound structure from our trough to our peak to our trough, notice the breadth here and how it tightened up here. This is an extremely tight third peak. I mean, really tight. It's unusual. Sometimes it'll be 8, 10, 15%, maybe 25% less than the depth here, which would be double. So in that scenario, we should still come in around late November before we finish this uptrend that we're in here, which could be the case. But that's my thought as far as the SP peak is concerned. No reason to think we're going to break these highs right now, just none. All right, looking at the NASDAQ. Now, of course, this has become the weak sister. If you look at the Russells, as well as, the Dow actually we lost 2.18% today in the Dow. So this is one of the few days that we had a bigger drawdown than the NASDAQ. We now will probably test this 636. We now have extended beyond what I would consider to be equality. So then my next look is going to be that we come down and we hit this C, roughly around 649 would be the next target. However, this looks very aggressive. It doesn't look to me like an ABC structure. Reason is because A is shallow. A is shallow typically only means that it's going to migrate to an impulse wave. So I would say 60% of my bias is that this ends up being an impulse down. And the question is whether or not it is a normal 3 and a shallow 5, very much something like this, or we get that extended 3 that I have a visual on both in the S&P and the NASDAQ here. So the bias would be that we're testing this zone right here, somewhere around 620, 625 from where we are now. All right, let's take a look at semis. And I want to spend quite a minute here on semis today. And I've mapped out a couple things here on semis simply because, I think this is viable, but I also think box 2 is viable. And I also think box 3 is viable. If that news out of China is accurate, right, and they are producing the machines to manufacture what ASML manufactures. Now we have a leading chip competitor in the US. So more news in that direction. It could get really freaking hot in semi. And I'm just going to come out to the monthly for a second. And I want to express that because notice once we break below this 406, we now have a reversion to the mean candidate where we're going to come back to normalcy. Realize this entire impulse was built on AI. If we lose that FOMO, we will come right back here pretty doggone quick. and we may already be headed in that direction. And I'm going to come down to RSI just for a second. Obviously, we have a broadening formation in our slope as far as RSI here in our cycle wave 1. This is our cycle wave 2. The projected cycle wave 3 is up here. I've not moved it down yet. Reason is because I still cleanly see a peaking drive 1, peaking drive 2, peaking drive 3 in my intermediate wave. So I'm looking at this as wave 1 of an intermediate wave in an impulse that ultimately does end about right here. However, that could be wrong. I mean, we could have an ABC structure right where we're at. But I wanted to mention how deep we potentially could go if this market breaks down. Now, the trouble with that is everything else is going to follow. This is going to be like everybody's heading for one exit, and there's only one exit, and there's so many people that can get out. And we will have them stop trading on the markets if we get down anywhere near 400 in the semis. We will have a number of stops, whether it be one particular stock or the entire market for a couple of hours, or I don't think we'll hit a trigger where they shut down the market for an entire day. I don't think we're going to see that. But realize if semis give it up here, we have some huge downside ahead. So we want to be very conscious of that as far as our look. Now I want to come down to the 4 hour and just drill down just a little bit on what this wave is. Notice this trend. So this is a trending corrective wave. Right now, it's showing as an impulse. It's one of the few waves that, when I talk about 3, 5s, and 8s as far as Elliott waves, trend down and trends up on certain legs can actually have, instead of 3 waves, they can have 5 or 8 waves. So that's the way that I see the breakdown here. So we now actually have 4 waves. So we're probably going to get a 5th wave down around 476 minimum as far as SMH and semis are concerned. And then we could get 8 into that second box. And that's one reason I'm highlighting it as a potential target, because I do think that the structure or what I'm seeing in price is a trend down. Now, the question is, does it continue and we get a full reversion to this shelf? Honestly, I don't know the answer to that at this point. All right, let's jump over to Bitcoin. And I'm really surprised we held up as well as we did today. And simply because historically, when the Fed when Mr. Market doesn't like the Fed, we flush historically. And he didn't do that. So to some degree, I view that as some relative strength, and we're holding this shelf. So let me come in and just map what I see here. So we have this, I guess we're going to call it a sissy sell side imbalance off of this shelf right here. And that's right where we are. We've tested the bottom of it. We wicked below it. Body's held. We haven't broke below it. So that 58,832 roughly is what we need to hold for the bulls to stay in control here. Now, we have quite a jump from there to the downside. So it now comes in between 48 and 42K if this doesn't hold, because this is not going to hold. The reason is because you have this buy-side imbalance right here that will be fully taken out on any drawdown once that upper box breaks. So we'll just have a clean flush below it. That will not hold. That is not solid support. Even though we tested it once, we have no structural test here, and we are below this band as far as that's concerned. So structurally, I think we'll come down to 42. So the line in the sand on Bitcoin is 58,658. We get below there. Then we clearly have a shot for 45, and I'm sort of waiting to see how it materializes. All of my alerts are set on a weekly close above the body of this candle, which is at 65,859. So I'll have all kinds of alerts going off, and I have those tagged in different cryptos as well. And then just a quick peek at IBIT, very similar look. I do think we come down, and I think we got a lower count. I can't tell you exactly how low we get in Bitcoin, but that's my thought. All right, let's jump to some charts. And hopefully I have everything tagged out here. Now, first chart that pops up is HPQ. I was hoping we would get a better back test today for a good setup for the breakout. And what I wanted, because this actually has a solid shot at this T3 at 31, and it's a name that sometimes moves. I've traded it many times over the years. So we got this little shelf right down here. I was hoping we'd come back and that would hold right here at 27. And then we get this launching pad off of there. So that, if I have to say that anything is on my radar, that is one name that is at this point. Now, also too, I know my charts have been changing a lot. And just spending a second there, the reason they've been changing a lot is because I'm learning about how large language models actually become aware and become self-learning, because in Chartbook, that's what we're working on. So in other words, we're trying to teach it what I know so it can predict all the charts that I put in there. And ultimately, my hope is that we have every stock on Wall Street in there, and it will be able to watch everything and give us the highest risk reward ideas, which, to be very frank, unless I'm looking at the right names, typically on a day-to-day basis, I don't look at 200. So if I'm successful in getting there, we'll move further in that direction. So what we've done is, this is Golden Box 1, and I'm still working on programming. It will ultimately anchor Golden Box 2, Golden Box 3, Golden Box 4, Golden Box 5. So it will identify the stair step that we have in Elliott Wave as far as markers. And now the ATR that is on the chart, that is based on a projection from current price. So it's cascading or inclining. Not sure what the inversion phrase of is for cascading, but as we move up higher in price, it's going to predict off of this anchor. So you'll see it says the anchor price. That is not necessarily the impulse wave. It's measuring what the most likely outcome is based on the average true range, and we're doing a T1, T2, T3 target. And honestly, that's completely come from my work with HELOP and AI, simply because it's telling me it's 9% more accurate in targeting than what I do with my Golden Box. So I've built both into it, where we actually have where it's competing with each other and it's deciding what's best over time. So I like HPQ for a breakout. I'm just waiting for the setup. I don't get my setup, I'm not taking it. I'm being stingy. I don't want to put anything on unless I have a clean setup, and that's my thought. All right, let's look at VIRT. Now, we have a lot of levels down here. I want to come out to the weekly, just noticing I was on a 4-hour chart. So, as I look at these buy-side imbalance, the buy-side imbalance up here, we have a buy-side imbalance here, buy-side imbalance. But we really don't have a sell-side imbalance here, with the exception of this spot right here. And I'm counting it as a collective. This is, if I had to say confluence, it exists right here around 36.99. So the structure that I see at this point, I see peaking drive 1, peaking drive 2, peaking drive 3. So we're looking for an ABC structure. Now I'm going to come back down to a 4-hour and sort of give my visual here. The problem when I come down to the 4 hours, I got an ABC. Now I see a weak corrective leg, or a dead cat bounce, where we rejected price. So I'm looking internally. So this is what I see as our ABC structure. And then we've gotten kind of a corrective leg. I'm going to call that an impulse. So the most likely outcome is that we maybe get an ABC total here. So this is our A, this is our B, and we likely could get a C. Now, when I look at support where we are, this is the most likely place for us to come, which happens to be structurally sound for an extended or an elongated A. So that's sort of my thought. Until we get back above, and I'm just going to say this, we need market strength. We need market breadth. Then VRT is probably worth the shot once it clears this $59. And if I was holding this, my stop would be the body of this candle at roughly 56.10 right here. Because that structure breaks, it does weaken substantially, and the most likely places that we do test next shelf around $51. Not a huge move, but that's just my thought pattern as far as how the structure should evolve. Once we have weakness, we should see some continuation. And that happens to be close where I'm predicting C to be. So let's jump over to TLN. Look at the weekly here. Boy, when this thing first pops up, it's like a noisy tape. My first thought was, what the heck is this when I looked at it today? So we've held this 298. Now, this is our buy-side imbalance. Right? We haven't gotten to 50% yet. 50% is about 304. It should, and it actually looks like it might want to bounce, right? Right here. We want it to get back at 50% of the candle at 340. Let me come down to the 4-hour on this one as well. So structurally, we have a pretty clean ABC here. However, my problem is how deep that we've got an elongated C on the second ABC. So here, I'm going to call this our A. Our first one. Then we have a second one. Actually, there's a third one here on the way back up. So if this is an ABC and we're ending here, it's elongated, which, could be the case. We could push down to 280 in that structure. However, what happens if that's an impulse? And it looks pretty nasty once you look at that as an impulse. So if you look at this, and right now it would be a leading diagonal. Reason being is because this little noise right here looks like it's going to be shallow, right? So 3 will probably extend, I mean, a couple pennies, couple bucks below what 1 would. And then we finally put in our final down at the lower side of that 276. And that happens to be right in the box for the average true range as well, as far as that targeting, at least on that time frame. We've got a much larger target down here. Now, each time frame with the ATR is going to project where price would go based on that entire structure and the average true range that's on that chart. So it may be a little noisy. Now, let me step out for a second, and I want to draw an ABC on this because I think this potentially has much more downside in a weak market. So if that's our B, equality should come in here. But what happens if it becomes extended? Or what happens if it becomes elongated? So you want to be very conscious of where your stops are if you're holding this, because once it takes out this shelf, you got this little line right here, it really has a long way down. The next buy side imbalance is down at 216. So this, I'm going to say in my book, is a hard stop. If it takes that out, I would be out. That's my 2 cents. All right. Let's look at BE on the weekly. Now, I mapped out a head and shoulders here, somewhere around here, around 219. I was thinking that it would head further down. That's now in play. We have a, what the heck is that? I don't know, maybe, oh, that's automatically coming to me. Come down to the daily. Hold on a second. I want to turn something off because it's giving me lines I don't want to see. Don't know why, but hey, it's doing it. Forgive me. Wrong one. Okay, now there. All right, so looking at this back from the weekly, we have this buy side imbalance, which is down here to the low side, which is right where we are. So that's a good spot for us to hold with market strength. This is noisy as hell to the downside. It really is noisy. So the next buy side imbalance we have below there. So my immediate conviction off of seeing this and what we've already gotten is that this doesn't hold. So the next place is going to be the base of the shelf, which is a very thin line here. Should get a good bounce right off of that, but that's my thought. TE also took a hell of a dump on this news as well that came out of China. I don't know specifically why. And in this entire sell-off we're seeing in AI supply constraints, I think is temporary because the dynamics have changed. I think what's happened is everybody's lost the confidence in the competitive edge the U.S. has, that China might actually be able to compete with us. So I think you had a lot of people taking profits who may have been holding some of these names back from 40 or 50 bucks. And they're continuing to sell if they hold at that level because they think at this point it is going to be a reversion to the mean. And obviously BE could here. So if it takes out, I'm just going to draw this line in the sand, this body of this candle here at 142. To be very candid, I'd cut my losses and just exit if I was still holding, or you could sell some covered calls on that. That's just my thought on that. But I think the head and shoulders is very viable on that name. Now, I actually like ALAB if we didn't have all the noise going on right now in the market, which is very, I don't know why, but the internals are telling me that we're going to be selling through August. That's my bias here, which is one reason I'm out of the majority of things in the market. All right. And honestly, this XRP thing, what's going on in Washington, I've wanted to really take a piece of that. There's been a number of things that I've really liked. However, I come back and I look at the dynamics and the internals and I'm like, no, I don't want to get into that because there's too much of a risk that we head to the downside. So we have this buy side imbalance here that needs to hold 256. We were doing fine. It's a great spot for a bounce, huge spot. But this last candle sort of implies that the sellers are in control because they took it back. RSI is confirming, MACD is wide open, and this likely extends, right? And again, it looks like a trend down to me as well. So until we close above, and I'm going to come up just a little bit higher, I'm going to say 274.03, this little spot right here, and let me just steal this for a second to show you what it levels out to. I really want to be back above that candle at 277.85. Reason is because that's where the euphoria happened in this last leg. And that's where these buyers will get interested here as far as institution. They've already got that line written in the sand. As it gets above that 279.91, they probably have buy orders sitting. And that's sort of my thought. I do like ALAB, but I think we need to let this market sort of calm down. And I think the rest of this week is going to be very telling as far as that's concerned. Today may have just been FOMC, and realize we're also in optics, right? So it might have been those kind of shenanigans, and we don't know if it's going to stick really till this week's close and how we open Monday. If it's not going to stick, we will gap down a decent number on Monday. I can tell you that for sure. If we're going to get any kind of dip buyers in here, we should see it by the close tomorrow. We should gap up in the morning, I think, regardless to some degree. Then the question is, do we have that sell-off? So if ALAB gets back above that line, then maybe it's a shot. All right. Now, space is absolutely in horrible shape. Horrible. All right, we've got this, and I'm just I classified everything in space the same way, simply because that breakdown, I think we test this shelf for sure at $7 or $8 from where we are. It's already broken below here, where really it invalidates the entire upside. Another reversion to the mean play out here. So, if I'm holding, and hope to God nobody is, I would not be holding. I would take my losses and then try and find a better entry at $7 because there is too much of a chance this continues. However, let me jump down for a second and go through the chart here. So we kind of have this impulse wave down on one, or on our A, if we're going to look at it as an A. So this is our 3. We have an impulse down. We have a very shallow corrective leg here. Still could be an ABC, sort of an elongated one. However, the most likely outcome, and realize impulse wave, like 333s, they're an ABC, ABC, ABC. A 535 is the most likely outcome to what we have here, because we have a 5 wave in 1, and we really have a pretty clean 3 here in ABC. So this is wave 1, this is wave 2, wave 3 probably comes in somewhere around here, wave 4 and wave 5. So we could see, 423 when you look at the chart that way and you measure it from the internal going down to the 4 hour. All right, marathon. Again, it's going to fall into that category. Basically, my Bitcoin review or analysis is that we have more downside. Everything, doesn't mean they don't get bought out or they don't become AI infrastructure. That doesn't, that's a completely separate beast. However, it looks to me like we are at least going to test this little shelf here at 904. And let me just come out for a second. So I'll see that. All right. So we have really a huge sell side imbalance or buy side imbalance. It's a little bit below this one, which is much more defined. We've got a lot of noise right here, even back over here. If we chase this all the way back over to the initial breakout, notice how that confluences there. As a matter of fact, I'm going to tighten that up just a little bit for that reason. Notice we tested the low here, tested it again. Got an overshoot, but it came back, held it. Right? Just wait. Now it became support, was even support here. So at this point, that's held. So I would not be surprised if we test it again. The concern would be if we closed below 50% of that at 669. Actually, I would be a buyer if it gets down to 50% of that box, simply because the breakout history here, the test here, the test here, the test here, the test here. The likelihood that that fails is we got a really rough bear market we're going to, especially for crypto, if that fails. That's just my thought. All right, looking at UMA, Unusual Machines. Nice trend support line here that we're at. Just trying to get my thoughts together. I like it better at 1413. Pretty clean ABC. I think equality is probably the better pick. So I'm saying this is our A, this is our B, this is our C and 1. So this becomes A, this becomes B, and then our C's down here. I don't want to say this is elongated because there's really not now no impulse. So I'm going to say that the most likely case is that we have something similar to equality there. So this would be our bigger ABC structure. Could come down here. I'm wrong. It breaks above the body of that candle at 1954, and we are. And this ends up being support. Let me come out for the weekly. Just look at that again. Make sure I don't see anything else. Clean RSI divergence on this low. And forgive me, I'm going to have to drill down and see whether I see a confirmed low there. I can't see it. I prefer it if it's glaring, but if it's not glaring, I have no choice but just to measure. And we shot below there. So this is really invalidated as far as a confirming low, and this becomes more of a confirming low, divergent low. So the fact is we still have the 3 drive potential right there. So roughly maybe something like this. We get back down to about 1495 would be a good spot to give it a shot if you don't have a piece there, I think. Just for my thought, I am getting an ATR, or excuse me, a golden box target on the corrective leg back around 1035. Now that is measuring this breakdown right here. So it's measuring this B, this C, and this B. Is how it's measuring it. So it's giving us a trigger for an entry. Highest risk reward we see. It really wasn't a great risk reward there anyways. It was 116. So it wouldn't have landed inside on I don't know if you guys noticed in chart book, the left side of the panel has risk reward boxes. So when a trade setup hits a certain minimal risk reward, based how we've broken those down, they'll appear over in those boxes. Those are your highest potential return from that setup, whether it's a breakout, 50% back, whatnot, golden box. The higher the risk reward, obviously the better the return for us on those types of trades. So, the idea here of the way this is which I'll publish these as soon as I get the fine tune and we have the numbers from the large language model on which is better, because that's ultimately the answer I'm looking for, so it can score it. But the thesis here is you put a starter on here, you add more here, and your final target is 995. Doesn't mean you don't take profits in between there if you set between them. This is just the average, and then ATR gives you another targeting zone where maybe you trim it T1, you trim some more at T2, and you hold a piece to T3. So they're two different strategies, but they ultimately attach to the same thing to some degree as far as how they play out over time. So UMAC, I do like it better back at this 1450. All right, CCJ. Now, metals as a whole look freaking horrible. I was noticing that, I went through it in some deep, because I went in, Trump made that comment about magnets. Well, he got me all, actually, when he's harped about a lot of this different stuff, it's been profitable following. if you go in the right direction. Well, I drilled down and I looked at that, and I'm looking at I'm literally looking at everything that I have on my all domains thesis as far as metals. I'm literally reviewing every name. I'm down to the daily. I'm down to the 4 hour. I'm down to the hour. I'm drilling down. What do I see? Why should I buy this? And I'm like, I'm just not excited about this sector right now. It's telling me that we have one hell of a recession coming. But yet, if you look at shipping, you look at freight, right? And you look at all of the ships with materials moving, how much China's buying, right? It's telling us we're going to have a boom. But when you look back at these stocks, it's saying, well, yeah, there's going to be a boom, but maybe the U.S. isn't part of it. So I'm getting these conflicting stories when I look at these charts. So I think Cameco's a great spot here at 76. However, I do like it much better at $58. And the reason is because this looks to me like a leading diagonal as far as a corrective light, as far as the structure. So this is our 1, this is our 2. I'm assuming we have an ABC structure, right? And not an impulse on wave 3, which is almost always an impulse buy. So 3, if that's the case, 3 should end around 78.81. Maybe we test the rim of this shelf, which would be right here is the most likely spot. Those two, that line right there. And then we come in and put in our 5 around 71. So I'll end on CCJ with, we want to chase market strength in this environment because we have enough names that just aren't holding up. And metals right now are just weak. So, my suggestion is we find something stronger. And with that, I'm pretty much done for the day, folks. Great trading. Until next time. All right. Have a great night, everyone.